Hello everyone, good morning. So this is gonna be our 3-day workshop, day 1 lecture on order block. There's gonna be 2 lecture incoming on order block, lecture 1 and lecture 2. And this is lecture 1. Lecture 2 is gonna be more in depth on order block. Lecture 1 is more on basic of order block. So let's start. Here, let's take a look at the definition of the order block. An order block is essentially a consolidation area or a price range where significant buying or selling orders have been executed in the past. So a consolidation range, a consolidation zone on lower time frame is a order block on higher time frame. Origin a range bound price action is consolidation, and consolidation generates order block on higher time frame. So let's take a look at our order block profile 1. Here a high probability order block profile 1 comes with 2 various scenarios. High probability, 1 opposing candle in a trend with fair value gap. Low probability, 1 opposing candle in a trend with no fair value gap. So in our first scenarios, we are getting a order block with fair value gap, and in our low probability scenarios, we are getting an order block with no fair value gap. So let's take a look at how they look on chart. Here's the example of high probability scenario. You can see that we have an order block, last down close candle prior to a move up. So high probability scenarios, we get 1 opposing candle in a trend with fair value gap. So 1 opposing candle in between the trend is bullish, and the opposing candle, the last down close candle, is coming with a fair value gap. So price came up, generated the fair value gap. Later this fair value gap with order block became a very high probability support zone. Price came down, hit the fair value gap, and then moved higher. Target was this recent relative equal high or buy side liquidity. So in a scenario like this, you execute as soon as price taps into the fair value gap, and your stop loss comes at the low of this order block. Price can also touch the order block. Okay, in some scenarios you will see this order block is a little bit more bigger, but it's coming with 1 candle. So when it's a little bit more bigger, you will wait for price to touch into the body of the order block and then execute. When the order block is small and we have a fair value gap, then you can take entry from the fair value gap. So I hope you guys get it. When the order block is small like this and it's coming with a fair value gap, we'll execute at the fair value gap. When the order block is bigger, you will recognize larger candles. Like here we have larger candles. Then your entry will be at the body of the order block. Price will retrace a little bit deeper when the body is bigger of the order block. So this is our high probability scenario, order block coming with fair value gap. Let's take a look at low probability scenario, and here you can see we have an order block but no fair value gap, right? So we have fair value gap but up here. Now take a look at this scenario. We have order block, and at the next candle we have the fair value gap. We have order block, and at the next candle we don't have a fair value gap. So that's why that's a low probability scenario. That's a low probability order block. If I see price trending and then opposing candle in the middle of the trend like this, I would prefer to see a fair value gap with last down close candle or up close candle. If that order block is not coming with a fair value gap, then I'm not interested. Statistically, this order block with fair value gap provides more winning trades compared to this last down close candle with no fair value gaps. So I hope you guys understood all about our high probability order block profile 1. Profile 1 has 2 various scenarios. One is high probability, another one is low probability. High probability scenario, 1 opposing candle coming with a fair value gap. 1 opposing candle will have to be when price is trending. Okay, so you will recognize that. See price here trending, then a down close candle, then a trending again. So you're basically not doing anything here. You are waiting for the pattern to show up, price to show its hand, and then when price retraces for this fair value gap, here you execute by targeting the recent swing high. So in a scenario like this, as I told you guys before, when the order block is smaller, you execute at the fair value gap. When the order block is bigger, you execute when price touches the candle's body. Low probability scenario coming with one candle. Now let's take a look at our order block profile 2. A high probability order block profile 2 comes with 2 or more opposing candle in a trend. So here's the example. We have a bearish trend, right? 2 down close candle. Then in the middle of the trend, we got 2 bullish candle. And then the trend is continuing again. So that's how it looks on chart. In the last example, order block profile 1, I showed you guys order block coming with 1 candle, right? And in this example, you are seeing order block coming with 2 or more candle. There can be like 3, 4, 5 candle. It doesn't matter. But you are going to be recognizing them collectively, marking them collectively. So here's an example of bearish, more than 1 candles making a order block, and here's a bullish example of more than 2 candles generating your order block. Very easy to understand order block profile 2. In order block profile 1, we had 1 down close candle or up close candle making a order block in a trend. So here's the same thing, but here we are getting more candles, and this is more high probability than a order block coming with 1 candle. Okay, there are scenarios where order block coming with 1 candle is high probability, as I showed you guys earlier, when it's coming with fair value gap. There's another scenario, it's when price generating order block after a stop hunt. I'm also going to be showing you guys that, but this is a very high probability scenario. So whenever you guys see price trending either bullish or bearish, and then at the middle of the trend you get a little bit of pause, price consolidating or accumulating, and on higher time frame, if you go on higher time frame from lower time frame, that accumulation or consolidation range from lower time frame will become a order block on higher time frame, like this. So in a scenario like this, you can get more than 2 candle, but minimum is 2, and that makes the scenario high probability for entry. Let's take a look at the next slide. Here I showed you guys an example of how how algorithm gets support from a order block in a bullish trend. So here you can see we are trending bullish. This is our order block profile 2, right? More than 1 candle. Order block profile 1, only 1 candle. Now here, right, this is order block profile 2 and this is 1. You can ask me, Hydra, I can see 2 candles. Then why is it not order block profile 2? Because in the middle of that down close candle, we have a green up close candle, right? So if there's a separation like this, if there's a green candle, then we are going to be marking the biggest biggest down close candle like this. So in this scenario, I'm not marking this order block. This order block is bigger than this one, right? So I'm going to mark this one, and I'm going to recognize this order block as a single order block. So that's our order block profile 1. Here we don't have any separation. That means we don't have any up close candle separating these 2 down close candles. So that's our order block profile 2. This is our order block profile 1 again. This is a high probability scenario, 1 down close candle. Here we can also see sometimes what price does, it generates 2 or 3 down close candle and then a fair value gap. So it's also going to be order block profile 2. So fair value gap, order block profile 1, then order block profile 2. Now this is another profile that I'm going to share very soon. Let's take a look at that's a tip. So that's an extra tip on high probability order block, mean threshold. So in an order block, mean threshold is going to be always high probability for support. A high probability support or resistance on order block can come from often mean threshold, 0.5% of the range. 0.5% of the range from order block. So here comes your order block, 0.5%. Here comes your order block, 0.5%, which is very high probability for resistance here. So suppose you saw 2 up close candles like this, right? Now, from where can price get high probability resistance? You can wait patiently for price to come up and hit 0.5%, or you can execute right at the fair value gap here. We have a fair value gap, and put your stop loss above, right up at this order block, right? So here your stop is going above this order block, mean threshold. You don't want to see price violating mean threshold. If you see price violating mean threshold, close your trade immediately, because whenever price violating mean threshold of a order block, that means what? That order block has a potential to turn into a breaker block. So this is something that we don't want to see here in this scenario, because we are shorting. So we want to see price respecting this mean threshold. If price is doing that, that's a high probability scenario. Very easy to understand concept. Let's take a look at our next slide. Here, let's take a look at order block profile 3, the trend starter. Okay, we're going to be seeing in details, we're going to be talking more about these profiles in details, how they look on market, how they look on chart, okay, in our next lecture. So this lecture 1 is going to be very basic. As I told you guys before, I'm just going to be introducing to you how different order block looks, and later in the next lecture I'm going to be showing you how to identify those order blocks in actual chart. So an in-depth lecture is going to be coming very soon. A high probability order block profile 3, the trend starter. This is the order block that starts a trend. It comes after price does a stop hunt and turtle soup. So it has 3 profiles. A high probability order block profile 3 comes with 1 or more opposing candle after a stop hunt. It has 3 various scenarios: 2 or more opposing candle with stop hunt, 1 opposing candle with stop hunt, 2 or more opposing candle with SMT. So let's take a look at the examples. Here at the first example, I'm showing you guys 2 examples together, the first one and the third one. 2 or more opposing candles with stop hunt, that's the first example, and the third one with SMT. So how does it look? How does it look here? We can see we have a swing low, right? So price did a stop hunt. We got a couple of down close candles and then up close candles, right? A separation, then continuous couple of down close candles. Later price came up, closed the candle's body above. They become a bullish order block. So all of these down close candles are our bullish order block, right? And these order blocks are one of the highest probability order block that you can trade. They start the trend, so they deliver most of the time 2 hour to max 4 hour, 5 hour, if you can find them out at the correct time. So these type of order blocks are coming with a stop hunt. Before I showed you guys the order blocks that are coming at the middle of a trend, and like after a trend starts, but this is an order block that starts the trend. So very high probability is coming after the stop hunt, down close candles, separation, up close candles, and then you mark all of these down close candles. Second image here, stop hunt, down close candles, a separation. So here, take a look at this example here. We have multiple down close candles, then some up close candles, then down close candles again. So price got separated here. So if you see a scenario like this, where we have a bearish trend, then a couple of up close candle, and then a bearish trend, you are going to be marking this part, the first part here, okay, after the separation, after the up close candle. So you're not going to be marking all of these down close candles as an order block. This is the high probability order block. Price, if you are correct identifying the DOL, that means what? If you are correct identifying this bullish PDRA, then price will return back to this order block most of the time, which is this one, and then follow the trend. So this is the trend starter model. Very high probability, delivers more than 2 to 4 hour, usually 2 to 4 hours. So here's the second example, 1 opposing candle with stop hunt. So here you can see some couple of here you can see we have swing lows, a stop hunt, down close candle, only 1 down close candle, then a separation. So we're going to be marking this last down close candle. Price closed the candle's body above, price activated this down close candle as an order block. So all you are doing here, After you recognize price did a stop hunt, price has now a order block, you're going to be waiting for price to close a candles body above this order block, and then once price retest the order block again at this candle, so here you have a closure at this candle, price retesting it, that's your entry with a stop loss below the order block and target 2 to 4 hour. Very simple model. Again, this is just the basic what I'm showing you. I'm introducing to you the basic models. Later in the next lecture, we'll be talking more in depth about these models with much more examples. Let's take a look at our next slide. Order block at 0.5% of the dealing range. Often high probability order blocks comes at the 0.5% of a dealing range. Note, okay, so apply order block profile 1 and 2 at the 0.5% of the dealing range. So what was our order block profile 1 and 2? In profile 1, we had order block 1 candle with fair value gap and with no fair value gap. So that's what we're going to be looking for at the middle of a dealing range. And order block 2 came with 2 down close or up close candle. So 2 opposing candle in a trend with fair value gap and without fair value gap, right? So this is where you're going to be looking for order block profile 1 and 2. They usually form at the middle of a trend. So dealing range high, dealing range low. Here comes your order block. Then as soon as you recognize the pattern here, you wait for price to return back to the 0.5% and then execute here with a stop above the order block as I showed you guys earlier, and then target 2 to 4 hour or recent dealing range low. Very simple concept, but when I show you guys on chart, when I do backtest this concept with you all, it's going to become much more understandable. Here, that's an actual example. Order block has 0.5% of the dealing range. So here we have a dealing range. We have a swing high, swing low. Here I'm missing 2 candles, but it's okay. Suppose there's a swing low. And here you have order block profile 1. Profile 1 with 1 opposing candle in a trend. So our trend is bearish with fair value gap, right? Look at the next example. Couple of up close candle, price came back to this fair value gap with order block, and this order block was at the middle of the range. So here you can get more than 1 candle. Here you can get like around more than 2, 3, 4, whatever it is. You are not focusing on how many candle there is. You're focusing on if this order block is on 0.5% of this range here. So I hope you guys understood what I shared here. So that's gonna be it for lecture 1. I'm gonna be uploading lecture 2 very soon. Lecture 2 has more in-depth understanding of these patterns. There are 2 more profiles that I'm gonna introduce to you all on order block, and they are coming on lecture 2. I'll be uploading it very soon after I drop this lecture. So I'm going to be catching you all in the next lecture. Until then, take care, good luck, good trading, and peace.